So in this video, I'm going to go through my Lightyear investment portfolio. And as you quickly realize, this is a very small amount of money. And the reason why it's not a lot of money is because I want to show beginner investors how regular investment, even small amounts of their spare change, could actually add up in the long run to a good amount of capital growth. Now, the idea of this portfolio is to continue adding very small amounts, maybe 10, 15 pounds per month. And maybe in a year or two, you'll see just how much your money can grow instead of leaving it into a bank account or even just spending leftover change that you'll think is not very useful to keep. With that being said, this video is not investment advice. Some of the stocks that I do invest in with Lightyear are not stocks that I would actually invest a lot of my money in. That's why I think Lightyear is a great place to start investing with small amounts of money and to just see how investing is. And the other reason why I wouldn't put a lot of my money into Lightyear is that currently it is not FSCS protected, so that's the Financial Services Compensation Scheme. So other investment providers such as Trading 212 and InvestEngine, for example, are FSCS protected, which means that your cash is protected up to £85,000 per account. So take that for what it is and don't take this video as financial advice, please, or stock picking advice, because I myself wouldn't put that much money into these stocks. So without further ado, let's get straight into the portfolio. So when we log into the Lightyear investing app, you can see the current value of my portfolio is £43.27, which is quite a bit higher than it was last month. So we can see over the past month the actual change in our value of the portfolio. And any straight line that comes this steep means there is a deposit. So around 34 to 44, so I put in around £10 in deposits, and as you can see, generally trending, there is a peak and there are a few troughs. So at the moment, December and end of November has been a very volatile time in the market. There was actually a big peak around this time here, and that was followed by a flat line and then another dip. This is literally what investing is. The journey is going to be all over the place. So if we go over to the maximum, ignoring the big deposits here, the general trend is up and down, up and down. We can go through just 1 week to just show you that, yeah, there's some massive dips and then there's some gains as well. And this is why, as a beginner investor, you have to realize that investing consistently is your surefire way to actually make money, make capital appreciation. Basically, your stocks are going to go up in value if you keep investing into them, not just one lump sum. So if you see here, if you're investing regularly, you would have lost some money. As you can see, you would have lost something going down, going down, going down. But if you had stopped investing, you would probably just see a flat line or a loss in your overall investment. But you also have to realize that if you were buying during these dips, what happens is later there is an appreciation or the price of the stocks goes up. So essentially, dollar cost averaging or consistently buying your investments will see that you are buying cheaper, and also that value of it when it's gone down will then go up, and essentially you're going to be making more money by regularly investing. If you check our wallet right now, so I have only 3 pence in cash, and this was actually from dividends, which I will show you. And a new feature in Lightyear is the fact that they now pay interest on cash accounts, which is very good. There's no opt-in needed. There is 3% interest in the dollar amounts and 2.25% interest in the pound amounts, which is actually very good. So it is almost like putting your money into an instant saving account, which pays 2.25%. And if you know anything about instant saving accounts in the UK, 2.25% is achievable, but it's also quite a bit of a work to get around to open a bank account with 2.25% interest on a instant saver, so money that you can take out whenever you want. That is because you have to usually sign up to a different current account, change your current accounts or something along the middle, because I have tried, it's not that easy, which makes it great because Lightyear, if you keep your money as cash, that will incur interest, and that's just amazing. Maybe read the small print because I don't know too much about it. I did receive an email from Lightyear saying that they do interest, but it's always worth reading the small print because they might have a cash limit or things like that. So don't always take the headline amount for what it is. So if I click on investments, or if I just swipe up, you can see the current investments that I have. And like I said before, these investments are not necessarily investments that I would be making with my main portfolio. These are investments or mostly US companies, which I think are worth just checking, just putting some money in and see how they're doing. If they drop down below, I would add a little bit more. But yeah, these are not any stock recommendations or anything like that, but let's go through it anyway. So Pinterest, since buying it, it's actually gone down. So we can see it's gone down by 6.42%, and that's a negative yield of 6 cents. Not too bad. Of course, Pinterest is a tech company, and right now tech companies aren't doing favorably in the market due to of course, the fact that recessions hit tech companies first. Upwork is another company in the US, which is quite similar to like WeWork or something like that. So if we go into it, we can actually confirm that, hopefully, by finding out what kind of company this is. Okay, so this is why it's important to have this extra information within Lightyear app. Oh, I see. Upwork is more like Fiverr. Sorry. Yeah, see? Sometimes you get confused. Sometimes you can't know all the companies, and I don't pretend to know all the companies anyway. Upwork was just a company that I thought has some potential, not through my own analysis, but actually looking at YouTubers, which is not necessarily always the best way to, invest in stocks. But like I said, Lightyear makes it easy by only putting $1. Imagine losing $1, you would not lose sleep, hopefully. So Twilio is another company which I just took a stock pick recommendation, which of course is not always the best thing, but let's find out what Twilio actually does. So it's a software company. Twilio is down by 4.68%. Like I said, I have invested in individual American companies using Lightyear. However, I do not recommend doing this, and that is why I don't know too much about individual companies. I am more of a broad-based ETF investor. Mostly right now I'm buying S&P 500, and I think that's a good risk to reward ratio for investing in the long term buying ETFs. But of course, if you wanted to dabble in individual stocks, you can do that. But from my experience, when I first started investing, dabbling in individual stocks led me to lose, I think, around £10,000. So take that for what it is. So Xerox is actually up by 0.7%. Intuit is a company that was valued super high during the pandemic, but has come down super low again. And Intuit, actually, let's find out what it does. So it helps small businesses deliver financial management and compliance products. So I'm guessing it's another software-based company. CrowdStrike is another company that I was given free share of in my ISA, but I decided to invest in this again because the price had gone down a lot. And I'm sure this company is going to do well later on, but of course you can never know. That is down by 7.62%, and that is a negative yield of 8 cents. Next is a company that I personally really like, and that's why I invested in, and that is American Express. I think out of all the credit card companies, American Express has by far the best customer service. Even during something like a recession, American Express wouldn't necessarily be hit too hard, especially during Christmas when they have the shop small offer and so many other offers. People are always going to be using American Express. Of course, in America, that's the biggest market, but in the UK, I personally use American Express, even though it's not accepted everywhere. But yeah, you can see American Express is doing very well, and you can see it's not that much down from its pandemic peak, and that is up by 8% or 8 cents. The next is McDonald's. Now, McDonald's is a very good company, in my opinion, to invest during a recession because people do not cut down on burgers. Even if the financial situation is very bad, McDonald's is not going to suffer because even if the price of everything goes up, McDonald's relative to the economy is always going to be lower. It's cheap fast food that tastes good. A lot of people on low incomes do tend to go to McDonald's for their family dinner sometimes. So I don't think McDonald's is going to be a company that is going to suffer too much. It's probably going to grow more now during the recession, and then following the recession it might flatline for a while. But yeah, McDonald's is up by 11.2%, and a lot of these companies, including McDonald's, do pay dividends. Next is Starbucks. Similar to McDonald's, Starbucks is not going to feel the brunt of a pandemic, even though personally I think it should, because Starbucks coffee is terrible and it's overpriced. But you know how capitalism works. People love Starbucks. People love following other people, such as buying iPhones and buying Starbucks coffee. They're going to do it regardless of if they're like in debt, they're still going to buy coffee. So that's a surefire way of putting your money into a company that is probably never going to fail until it does. So as you can see, massive peak during like May, and then it's gone really up high near its pandemic highs. Next is 3M, and 3M is a massive company that produces all sorts of things. They do lots of things that you'll find around your house, such as like scotch tape, rubber tape, insulation tape. Let's actually give you exactly what they do in a summary. It manufactures, technology innovator, transport, electronics, healthcare. Basically, they do a lot, and 3M right now is up by a big, nice 15%, so that's a 17 cents increase. Next is Franklin Resources, and this is doing very well. It's up by 20%, which is 23 cents. And of course, the more money that you put in, the more the percentage actually means a higher return on your money. So if I had put in $132, I would be up by $2.30. That's how it works, but the more money you put in, the more risk there is. And Franklin Resources was a company that I found on the daily dividend pie on Trading 212 that was individually doing really well, so I thought I'd invest here. Next is Sherwin-Williams, which is another dividend paying company, and that is up by 22.78%, so that's a 25% increase. Ecolab is another company which I'm actually not too familiar with, and I have invested, so it just goes to show that you should do your research before that. So water, hygiene, infection prevention solutions, global healthcare, and things like that, and that's up by 0.74%. Recently, life sciences and like biosciences things have not been doing that great, but as we progress through the future, me being from a kind of biosciences, biomedical engineering background, personally, there is a lot of money being put into that, even though during the recession, less money goes into that kind of things. But of course, as we grow older and the population size increases and the life expectancy increases, things like this, there's going to need to be more investments in this, although it's not necessarily prioritized during a recession. So Fiverr, much like Upwork, is a company that provides freelancing, like contracting freelancing on the internet, and that is down by 12%, and it was a pandemic explosion of being valued at $323. Of course, right now it's being valued very low at $20 to $30. If I remember correctly, I don't think it's operating on a profit now, but it might become profitable soon, which might see the share price increase. Tesla, a really nice company to invest in because they have the market share in electric vehicles, which going forward is probably going to be very important. So Tesla is down by 12%, and as you can see, they were very highly valued during the pandemic, and they've gone back down, although not completely crashed, and Tesla has a lot of potential. And the reason why the stock might have been going down, irrespective of the fact that it's a tech company first and foremost, is the fact that, you know, the CEO of Tesla, Elon Musk, is kind of wasting his time on Twitter and stuff like that. So the actual trust in the company and the CEO to make Tesla go far has kind of decreased. Next is Alphabet, which is basically Google, and you'll see that there's Alphabet Class A and Alphabet Class B, almost exactly the same thing. The difference, if I remember correctly, is something to do with the fact that one has a special shareholders vote and one doesn't. So I think Class A holds the vote, but you're not going to get a vote with any considerable amount of money. You're going to need a lot of shares, so it kind of doesn't make any sense. So yeah, Google, Alphabet, great company to invest in. They have tons and tons and tons of cash, and of course they are the search engine for the World Wide Web, and they make products such as Android, YouTube, so very unlikely to, you know, go bust anytime in the future. So I personally would invest in Alphabet right now, seeing as though the stock prices has reduced. Airbnb is down by 2.38%, and Airbnb is slowly seeing a comeback following the pandemic blues. Chevron is a company that pays dividends, that's down by 8.5%, and that's a negative return of 19 cents. So Walmart is up by 1.53%, and Walmart is a good, in my opinion, recession company, because no matter what the economic climate, people are going to need their basic essentials, and Walmart is more of a kind of value-orientated supermarket, like Asda. Asda is basically owned by Walmart in the UK. You see an increase in Walmart's bottom line when the recession hits and people are spending in more value-orientated supermarkets, which they're doing right now. Realty Income, which is a REIT, so real estate investment trust, as far as I know, that is up by 1.84%. Microsoft is actually up by 8%, and of course, if you don't know Microsoft, you're not living on this planet. They make things like Windows, Xbox, and all sorts of other things such as Surface tablets and stuff. AMD is actually doing super well. So AMD's actually released their new graphics cards, or they're releasing very soon, I think next week, and AMD has been doing really well. They've taken market share from Intel, even in the kind of server space where the server chips, AMD are providing a lot of them. AMD provide the graphics options for even my phone, the Samsung phone. They provide one of the graphics chips also for the PlayStation 5 and Xbox, so AMD is doing really well. It's a company that I would invest in. Nike is up by a large 20%, and Nike is another company that people don't want to let go, because of course, even though Nike is technically a luxury item, it is more expensive than it needs to be. It's one of those companies, if you're running, if you have any sorts of sportswear, you're going to go to Nike first. Also, something that might be actually increasing their favorability recently is of course the World Cup, and a lot of the team's football wear are made by Nike, which gives them indirect marketing. Johnson & Johnson is only up by 0.74%, and this is a company that is traditionally really stable. It's also a dividend aristocrat, and Johnson & Johnson has been around for years and years, and it's probably a safe investment. S&P Global is up by 7%, and that gives me a return of 71 cents. So like I said, I did receive some dividends, and I'm trying to actually find out where I could find that information. I think Lightyear is a really good app in terms of user interface, but it is definitely not the easiest to actually navigate. It's almost too simple. So what happens if I press this? Okay, so activities. So in the past month, in November, I received 1 cent from Starbucks. I received 3 cents from Johnson & Johnson, so I can go into it and they'll show me all the stuff like dividend per share, tax percentage, and so on and so forth. And I received 1 cent from Microsoft. Now, it is worth mentioning that I have invested very, very small amounts. So for example, AMD, I only have, look at this, 0.035 shares. So that is the thing that with fractional shares is you're going to get fractional shares. So realistically, the dividends are not going to be life-changing. But investing is a process. As you can see, over the past year, we actually started from £8, and including our deposits, we are now slowly at a peak of 45 and now at 43. So you will see if you keep watching this channel, if you keep watching these videos, that even something laughable like we started with £8, we're putting in money, you know, our spare change. Something laughable will grow, and that is the entire point of this video, is that it's kind of going to be a snowball kind of thing. I'm going to keep adding money to this account, to this portfolio, and I will give you updates. Even though it will sound boring in the beginning, it will be, for me even, something to look over and to see how it grew. Of course, make sure to check out some of my other videos, and I will see you in the next video.